Hello traders and investors, this is Sal for Expo Futures, and I'm going to do this video for you on the wheat and all the excitement that's going on. And this video is half information, education, and half entertainment, because it's been a wild grains market, and I'll tell you why. Hopefully you're not too into the grains, because it's been a very interesting time, and if you have, bless your heart, you've had quite a ride. Well, today is August 5th, and we have grain prices really going all over the place, but wheat prices skyrocketing. Limit up, they opened, and actually they're pretty close to limit up right now. What we're showing is headlines for wheat. It turns out that Russia is putting a temporary ban on exports on wheat prices. On top of that, there's drought in Russia, drought in Ukraine, and excess rain in Canada. So that's causing wheat prices to just go through the roof. Okay, let me show you how they've been behaving. Now, this is not the actual current price. I've backed it up so you see where it was earlier in the month. So they had come down below $5 a bushel to high fours, 400. This is all in cents. This is the December contract, and it had already started to inch up on short squeezes, and then hints that the supply was in jeopardy for the new crops coming out. Well, let me show you what the option at that current time was trading, and put yourself on both sides of the fence. You could have been a seller of options, or you could have been a buyer of options versus trading the futures contract. You say to yourself, wheat is high, maybe I'll sell, or wheat's going to go higher, maybe I'll buy. Okay, let me show you the option at that time. So this is the option at that more or less the same time, and it traded after that first spike as high as 6 and change, so that's 6 points or $300 per option. And this is the 900 contract, and it chose one that was pretty far away for either the seller or for someone who wanted to speculate in the price. And it traded also as low as 3 points, so $150 to $300 for the option. Going back to wheat, well, guess what? It kept going. And I'm going to mouse over, scroll over, and get 813. So we thought 6 was high. Well, it kept going, and that's Mother Nature for you. The drought kicked in, and it's affecting global supply of wheat, or at least anticipated wheat, when you factor in the damaged crops. So guess what happened to the option? If you bought it, you're making money, obviously. If you sold it, well, we're going to see how scary selling an option that goes against you can be. I don't mean to scare anyone, but you have to understand the risk. So that 3 to 6 point option, it more than doubled, it more than quadrupled, and if you were still in it, it's trading around high 50s to 60 points for that option. So if you sold it at 6, it's trading at 60. If you bought it at 3, it went to 60. Isn't that incredible? Okay, so here's your wheat contract, and it's still going, still up there. And here are the wheat options. Okay, so keep this in mind when you have to when you're trading options, so you appreciate the risk up and down. And it's still better to use the options than trade the outright futures contract. The outright futures contract would have been quite a bit more painful. But when you factor in the volatility, this trade has just exploded. So stay tuned for more educational videos, and we'll see what happens with the grains. Take care.